Ladies and gentlemen, good morning. Thank you very much for coming and joining us today. I am going to take this panel through a slight journey. We're going to have a couple of minutes of a quick presentation to bring you up to speed on how we see the GCC market in particular, what's going on in the Middle East, and then that sets the floor for our discussion today. So I'll just take you through that quickly, and then we get introductions with the team here and get a flavour of what's going on. Just conscious of the amount of people we have in this audience at the moment, show of hands, is there anyone that is incredibly familiar with the region? Do we have people here who aren't? So if you're incredibly familiar, could you raise your hands? I can just, alright, we have 2, 3. Okay, alright, so we've got a good mix here, so I can just kind of pitch this correctly. So first off, for those that don't know, the Gulf Data Center Association is the region's trade association for data centers. It was founded in September 2022. We represent the 6 Gulf countries, which we'll get into in a moment. The association currently, as it stands, has over 1,500 individual members, over 500 corporates who are members as well of the association, and we typically have about 4,000 people following our news now on a weekly basis through our newsletters and our LinkedIn presence. So we've gathered quite a lot of information about how the Gulf works. I myself am based in the region, have been there for my entire life, and we think we have a few good insights into what's happening. So let's start off with a very brief geography lesson for those that aren't familiar. So the Gulf Cooperation Council, GCC, is made up of 6 states: Saudi Arabia, Kuwait, Bahrain, Qatar, UAE, and Oman. And these states are in a huge, rapid phase of change when it comes to the data center landscape. All of these markets that you're looking at the moment, 20 years ago, were locked in as data center markets by their incumbent telecoms companies owned by the government, and effectively sat as monopolies. However, in the last 10-15 years, every single government has come through the GCC, has opened up and tried to attract more and more foreign direct investments, start developing those economies further and diversifying themselves away from oil and gas, which is what they're famous for. And I'm just going to show you another slide here, just to give you some flavours and names of what's happening. So on the left-hand side, we've got some of the Gulf countries' biggest sovereign wealth funds, who are putting in cash now to data centers all over the world. And to the right, we've got leading names in the region at the moment who are local homegrown operators. Now, the reason why I am standing at an investment forum talking about sovereign wealth funds here is that one of the big discussions I have with members or those interested in investing into the GCC is the common phrase of follow the money. Where is it all coming from? So if you look at all the funds that we've heard about in the room next door, all these big operators, the top 20 global operators, have, at somewhere in their ownership, a trace of these companies. And what is happening now is that these sovereign wealth funds are starting to get their capital returned back to them in the Gulf. There are instructions, there are gentle reminders to bring the money home, and to bring investment home in particular as well. So a couple of trends that we're seeing with that are these businesses here. Now, interestingly, in particular, Center 3 and Hasna were actually portfolios of data centers that were carved out of the incumbent telecoms companies of the UAE and Saudi Arabia. To give you a kind of flavour, in the regional market, they view themselves as huge, but they're entering into the global stage and discovering that actually there's some really big players here already. And what they're doing is they're using their huge sovereign wealth funds behind them to grow and grow and grow. And there's been a couple of other interesting things that have happened recently. Misa out of Qatar was one of the first to actually start supporting availability zones from Microsoft in Qatar, and that put them onto the playing field of being a trusted operator, a local homegrown operator that could all of a sudden start supporting availability zones. And then G42, which is a very interesting business at the moment, started off in the pharmaceutical and biosphere, has now jumped into the cloud and AI game. And what's particularly of value to G42 is that 2-3 weeks ago, Microsoft announced a $1.5 billion investment into G42. That for us is a major moment in our region's data center history, because that is the first time we're seeing significant hyperscale investments into a local homegrown platform. And yes, there's a lot of extra dealings that went on underneath that. We're not here to get into that, but fundamentally we're seeing a region that's starting to really grow and grow rapidly. In terms of the kind of key trends, why are these things getting interesting? I think the critical thing at the moment we're seeing in the Gulf is that hyperscale requirements are starting to grow in scale. So for the last few years, we've seen scale around 2, 4, 6 megawatts in size. And now we're really starting to see that scale up. I'll stand for stage, not going to fall over now. We're also seeing the fact that sovereign wealth funds, as I said earlier, are bringing home those investments. So conversations with the world's biggest operators about coming into the market is happening right now. So for anyone that's viewing this as a greenfield region, let it be known that the top 10 operators are currently running around this region, identifying their sites, doing their deals with governments, ready to come in right now. And all of that is driving popularity in the market. The ecosystem is really alive and buzzing. We're seeing co-location rates remaining really quite high. So in the hyperscale context, a lot of hyperscale deals are still being traded at over $200 per kilowatt. And that is something that's quite interesting because we don't get that here in Europe. We don't get that in the US. So we're seeing quite big margin on the scale of that. Part of that is due to limited supply that's in the market already, and part of that's due to the fact that the hyperscalers are still trying to find those trusted partners who can come and deliver at scale. We're also seeing governments keenly trying to support the DC industry. We were in the room the other day, just over here, talking about how Singapore and potentially in Amsterdam and Dublin were slowing down the development of data centers in their cities because they were gobbling up too much power. We don't have that problem. In fact, we are the complete opposite. We are trying to get in as many data centers from across the world into our market. We are one of the only places on earth where we can build out entire power infrastructure in under 2 years. We have land, we have power, we have governments that are incredibly wealthy and can subsidize all of that as well. So it comes down to power is cheap. To give you a flavour, the most expensive grid power that we have in the Gulf at the moment is probably around 15, 16 US dollar cents per kilowatt. The cheapest is at 2 or 3. And that's before subsidies. So it's giving you a flavour of how much activity is going on to make this the most attractive market there is in the world at the moment. Governments, the 3 governments, Qatar, UAE and Saudi Arabia, have all jumped heavily into the artificial intelligence game. They want to diversify their economies. They are looking at trying to create proper sovereign AI platforms that can lead them into the next generation of technologies. They've all appointed their own AI ministers to government, and they're all investing incredibly heavily into the space. So as a result of that, we also have that perfect storm of high co-location rates, loads of cheap power, a load of demand for services as well. So that is continually driving people into this region. We're also gaining more international subsea connectivity, which we're going to get onto in a moment as well. And I think that's really important. Again, it comes back to that old historic stereotype that it's a difficult market and difficult region to do business in. Connectivity is improving, opportunities are improving for more carriers to come into each market. That is developing very quickly, and that's helping the customer base at the end of that conversation. And finally, it's a flippant comment, but I'm a big believer in it. It's always sunny and it's tax-free. And that is absolutely changing the landscape as well. We don't have the same ambience at the moment as there are in other parts of the world when it comes to what is occurring. We are seeing a lot more people wanting to come in to move into this market. As the GDCA right now, we receive about 10, 15 CVs a week from the biggest operators and hyperscalers around the world who are seeing projects come to an end in certain parts. Everything is flowing to the Gulf, and we can feel that energy. And we have got a long way to go. I haven't talked about cloud adoption, all those other important points that people want to hear. It's still very low. Apart from the UAE, most of the GCC has a long way to go before it's fully close to some form of cloud adoption. So we have the demand, we have the willingness to supply, got some capital, we have that perfect storm coming through, which we're really excited about. And my final point before I get to our panelists is this. We're looking at a telegraphy subsea cable map at the moment, and what you can see is the world's biggest chokehold for internet, which is the Suez Canal. 17 to 20% of the world's internet runs through the Suez Canal at the moment, and it has become a major issue for redundancy purposes. We do have 1 or 2 countries running around here that are at war, and that is causing concern. We have seen cables being cut, we have seen an awful lot of activity in the Red Sea and Suez. We're also neighbouring one of the world's most wealthy regions, and nearly every country here is working on plans to create an alternative route to the Suez to be cutting across. So in 2 or 3 years' time, we'll be looking at a map here that doesn't just show cables running down the Red Sea. We're going to see a very, very different story. And that is important because it's part of the region's strategy. So rather than just be something that floats past between Europe and Asia, it is going to be a regional hub, and that is going to grow and grow and grow. So I think I've done enough chat. I can then flick on to the last bit. which is actually introducing my panelists. If I start with you, Anna-Marie, could I ask you who you are and what you do?
This one works better. So, good morning. So I'm Anne-Marie van Zaterlof. I'm working for Data Center Hawk, a US-based company. I'm the regional director for EMEA, and what we do is we have a cloud-based platform where we have insights in the data center world. So mainly research and analyst work we do. We give you insights on demand, supply, pricing, trends in the data center industry. At the moment we try to be global. We have a lot of regions already on the platform, and we are now looking into the EMEA of the Middle East side as well, because we hear a lot about people who really want to follow the money, as Henry said, and are really want to invest into the Middle East. So it's a nice journey, and it's very interesting to see what will happen. But also what I like is also to see what the investors are thinking about it on the Middle East, because I have different stories, sometimes a bit anxious to do it, but so hopefully we get some feedback from you as well on it. So.
Thank you very much. If I could ask yourself, Mark, to also introduce yourself and...
We'll play past the microphone.
Perfect.
Morning. 15 years in the Middle East. I'm a technology partner from Pins & Masons. Pins & Masons is headquartered in London. We're all around the globe. In the Middle East, we're in the UAE, Saudi and Qatar. Basically, my clients are a lot of the people that Henry put up on his slides, so regional operators building out their digital infrastructure and international tech coming into the Middle East. That's what I've been doing for the last 15 years. Whether it's subsea, whether it's data centers, whether it's cloud, whether it's cell towers, whether it's now EV charging, that's what we work on. Particularly interested, as Henry showed on the telegeography map, we're spending a lot of time finding lots of interesting cable routes across Saudi Arabia and Iraq at the moment. I'm also a data center GC from the Middle East. So from Henry's slide, I used to be the general counsel at Mubadala, which is now Core 42, which is part of G42, is the big UAE AI company. So I was their general counsel, so I've seen it from both sides of the table.
Brilliant. If I could just start then with yourself, Martin, on a quick question then. So just for the audience, we've talked about the importance of new subsea cable investments and these alternative routes. I wonder if you could just articulate why that is so important at the moment and why the Gulf is working so hard to invest in this. I don't know if you can give a point on that.
I mean, there's a demand point in terms of the amount of capacity we need. I mean, if you look at how Middle East is growing, that's why we're seeing multiple cables. So in addition to being a data center GC, I was also regional counsel for Sienna. If you don't know Sienna, basically most of the telecoms kit on the subsea cables is built by Sienna out of the US. So we spend a lot of time working in the Middle East and Africa building out cables to meet that demand. Of course, where you get cables, you get data centers, and now we're starting to see the Middle East waking up to that, and they're starting to identify the ability to build out digital infrastructure ecosystems around the subsea. So wherever you find a subsea cable landing in the Middle East, you're seeing the growth of a digital infrastructure hub, and you're seeing a lot of interest from the hyperscalers in terms of getting into those hubs and building out from there.
One final question from Anne-Marie then as well, Matt. So Anne-Marie actually kind of lent into it for a moment, which is that there are investors in the room who are perhaps anxious about stepping into the Middle East. With your experience, you've done it in a variety of companies, both international and local. Do you think it's getting easier?
I mean, a lot of what we do is market entry, particularly for international tech coming in. They very much have identified the Middle East for whatever reason. There are other international markets beginning to slow. They see the greenfield opportunity in the Middle East as hugely interesting, and the ROI they can get in the Middle East. There are regulatory challenges. The Middle East is a hugely fragmented market. We deal on a day-to-day basis with the regulators across the Middle East, both influencing policy in terms of the regulations that are coming and managing the regulations that we have. And for a lot of our clients, that's the big hurdle they need to get across. The message that we're able to send to them is the regulations that there are manageable and that they're certainly not obstructing business. And in many respects, what we're seeing from a regulatory standpoint is regulation coming in that's really going to grow the digital infrastructure business. Because as Henry started off with, we have governments in the Middle East that are hugely interested in bringing in digital infrastructure. They want the Microsofts, the Googles, the Amazons, the Metas of this world in region, and they're building regulation that's fit for purpose, which for us is great because then we leverage globally, look at what best practice is, work with the regulators in region and bring that in.
And those regulators, they're coming on now, aren't they? We start to see the arrival of more and more regulations, but also regulators who are actually starting to bite into the market, start to actually find people in different markets as well. And I think they're also trying to get into data centers and regulating data centers, is that right?
They are. It's an interesting one, that, and it's certainly something that we work a lot with regulators in terms of right-sizing both data center and cloud regulation, and that's across the Middle East. And of course, there's a tension there between building a data center industry, which every country in the Middle East is hugely interested in doing, and bringing in regulation to control that. Data's a big issue in the Middle East. Every country has their own data regulations. They're relatively familiar to all of us that know European data protection regulation, but they just like to add things or take things away. They just make them a slightly different and a little bit more of a challenge. We see a lot of regional, and GDCA is doing this as well, a lot of regional industry-based lobbying to really start harmonizing some of those rules, because we've got to be able to move data around. If you're an international data center provider, you need to be able to move data around if you're a cloud provider. I mean, we've had Equinix in region. I basically came into the Middle East off the back of Equinix coming into the Middle East. We've had international data center providers in the Middle East for a long time. This is hugely accelerating now. But we do need to deal with the data regulation point. There are a lot of industry bodies, there's a lot of government, particularly the US government, not unsurprisingly with US tech, really looking at this very closely and coming up with solutions that is really pushing in region to find ways to deal with that.
Thank you very much for that. If I can now pass the mic to Anne-Marie then. A few questions on Anne-Marie. So we've got, obviously with Martin and his local experience, things are improving, there are challenges in the Gulf, but we can see paths moving forwards. I was wondering if I could ask you, if I could put your European brain on for a moment. From a DCH perspective, you speak with all of the major European operators that are kicking around the market. Are they talking about the Middle East? What are they saying? What are their challenges at the moment? Is it the regulatory side? Is it the fears of investment? What do you think?
Well, it's a bit different. I think a lot of providers, they're looking at the Middle East, but mainly because there's a lot of hyperscalers who want to go into the Middle East, and they're bonded with their hyperscalers. So if they have an hyperscale customer, they go with them towards the Middle East. It's not per se that they want to go to the Middle East and build similar data center environment as in Europe. So it is still very different in the Middle East compared to Europe, and it feels like you go back. So I've started at Equinix. We've been there, how they work on the communication side and the interconnection side and things like that. And it looks like that we have to start over there as well, because one of the bigger issues in the Middle East is the interconnection. So as long as you stay in country itself, it is possible to have more like services that the hyperscalers provide. You get connections, although they're very expensive. So that's what we had 10 years ago in Europe as well. But as soon as you have like international companies, they need to go to different countries. So the biggest thing to solve at the moment is actually the interconnection side. How do I connect more sites in the region to have the same services in every country where you are? So that's quite an interesting one, which I not see that a lot of providers think, yeah, that's going to solve that. Let's go there. It's like now the wave of hyperscale coming into the Middle East. But the next step will be, okay, and now we're going more, say edge co-location part, so how we're going to solve that part. That will be then the next step. But I think everybody is only looking now at hyperscale, invest, return on investment is great, but there's something else. I mean, then you have all the international companies, but also the local companies in countries itself, they want to make use of all those services. So how are we in the Middle East going to serve them? That will be an interesting next step to see as well.
I think it's spot on, and then just for the audience, a comment on that. So the majority of the Gulf is heavily focused at the moment on trying to serve the hyperscale market. So we've seen the step in of local property developers, we've seen the step in of the incumbent telecoms companies, even challenger telecoms companies, who have seen this wave of requirement come into the market and have had to make a step forwards and decide whether they want to jump into it or not. And the predominant view is that they've all jumped into hyperscale. There is actually quite a bit of an interesting thing where there's, in some markets, a fair amount of supply coming into the market, because get this, they have built hyperscale campuses speculatively. There are entire availability zones built speculatively in the Gulf right now. And it's something that I try and explain to these investors out in the Middle East, like, you do realize no one else does it this way. No one else builds a 100 megawatt campus without having a tenant or a customer on the end of the hook. That kind of gives you the idea of appetite and, in a weird way, anxiety to get into that market as much as possible. And I think that's quite an interesting place there. This idea of following it up with typical traditional services that you see here in the established markets of Europe and North America, that we need to fix now and fit that into our portfolio as much as possible. So do
you think that there will be an oversupply in Saudi soon? Or soon, but I mean, there's so many people who want to jump in a train, and so it's like, is it not like an internet bubble maybe in Saudi, or what do you thought about it?
I think that's a really good question. So my view on that is we also have, just to kind of give the audience a flavour of how active these governments are. The government of Saudi Arabia has stood up and proclaimed, for example, in the Saudi market, that the market must provide 1,300 megawatts of data centre supply by 2030. That is supply. There is no discussion on demand for that or not. So as a result of that, that has thrown a lot of the big local families to jump into the game. They're doing their bit for the country, the bit for the government, which is I'll deploy some capital and jump in on this. Do I see oversupply? I see the big risk for the markets at the moment is that those who are genuinely coming in from the cold, who've never done this before, are going to really struggle with the track record problem. Which is, how am I going to become a vendor for Microsoft, Google, and Amazon Web Services if I've never built them before, if I've never done this before? And the attitude at the moment is, well, we'll throw people at it. We'll employ some of the best people in the world. It's why we talked about people, again, in that room on the other side, about we need more people. Well, a lot of them are being given a sunny home in a tax-free location in the Gulf. That's where they're all running off to, because they're getting triple their salaries. I do think that we're going to have a few big winners, and we're also going to see a few big losers. I don't know if you agree with that yourself, Martin, as well.
Yeah, I think there's a mentality in the Middle East of build it and they will come, and we've seen that, whether they're building international financial centres and they filled them out, whether they're doing Saudi giga projects, and they're pretty confident, I think, that they're going to be able to do that. I think the interesting thing will be how they, I think it's a really great point, and we see this, the work we do in Southeast Asia, the work we do in Africa. I think the interesting thing will be how they manage the hyperscaler relationship, because it's very different to what they've dealt with before. The kind of demand they'll have from hyperscalers goes back to the points that were being discussed in kind of the opening sessions in terms of delivering these projects on time and having the right people around to be able to do that. That's going to be a big challenge, particularly based on the amount that they're delivering. So there's going to be some interesting stuff being thrown up there, as you say, because you've got a lot of people piling in. That for us is quite interesting. I think we're more interested in where we've seen the telecom operators. So from the slide, the Hasnars, the Centre Freeze, we know there's similar discussions elsewhere in the Gulf at the moment where the telecoms operators are looking to divest certain of their assets, bundle them up. We've got a massive IPO surge going on in the Middle East. These assets are going through IPO as well. I think they're really interesting because I think they're in a lot better place to get to deal with these kind of demands that are going to be coming from hyperscaler investments.
I completely agree. I think that hearing some of the challenges in the room earlier about capital, raising capital, etc. I think another point for the GCC is that this is actually aligned with government strategies, visions we call them. So every GCC state has announced and launched a 2030 or 2040 vision, and so their ability to actually finance these projects to support that vision gets a bit easier, is my understanding. I don't know if you want to challenge that or not. But the likes of PIF, for example, and what they're doing in the space, buying up everybody they can, I think all of that is to support a Saudi vision. The Qataris are doing something similar, the UAE lot are doing something similar as well. So I think it's quite an interesting journey that we're seeing moving forwards. So if I could turn then kind of to final points. If we're in a room now in London at the moment, we've got people here who are asking about the Middle East and all that kind of stuff. Both of you have now been and travelled in the region, you've seen a few bits more of it. Can I ask you your final view, I should say, on how you're going to view the market in 5 years' time?
A lot of echoes. I mean, you still have to adapt how it is. But what happened in Europe, of course. So I foresee that a lot of hyperscalers will come in every country. But I see in the coming years what mainly will be important is more the local data centers, edge data centers with hyper edge, web scale, enterprises going in. I think that I will see needs to grow after the jump of the hyperscalers into it. And that will be something they will have to work on the coming years. And it has to be something really solid in 3 years' time. So that's what I see for what will happen in the Middle East as well. Because the talks are not about that part, not yet. But I mean, that will happen, and that needs to happen. And I think then certainly more investors will be interested in the Middle East because they're still very cautious. And all the investors I speak to until now, and I speak a lot to them, it's still like, whoa, yeah, let's see first what will happen with the hyperscale. But as soon as that is done, and the AI is there, the availability zones are there, then everybody wants to use the interfaces. They want to use all the applications there are because they're all product driven, technology driven. I mean, there's so many young people, they want to do everything with their phone, it has to be everywhere. And that next step, that will be an even bigger jump, I think, after a few years. So that's what I would foresee in like 3 to 5 years.
Fantastic, thank you.
Yep.
Well, I agree with all of that. I say I'm from Dubai, so I've literally got 6 phones on me. So it's, I think the really interesting thing for us, and I think probably this is from me coming from a subsea cable background, is we're going to build a lot of data centers. We know the technology visions, we know everything about they're doing with AI and mobility and everything else, content, all that's being consumed in the region. We have a massively growing population. I'm really interested to see what they're doing on the cable side, because you've got to move this stuff around. And whilst we see more data centers coming in, much more regional presence than we have before, we still need that cable infrastructure as well. And we know from the projects that we're working on, both subsea and terrestrial, that's really interesting in terms of basically connecting all those data centers up and actually making them work properly. That's going to be a huge part of it, because though they work at very different speeds. Building a cable across Saudi Arabia is a lot different to building a data center in Saudi Arabia. So, and the interconnection point was huge, and has always been a real obstacle. So I think at a regulatory government level and then at an investment level, that's really going to be a key to the success of the region, I think, from a digital infrastructure perspective.
I completely agree with both of you. I think that the points about young population, so most Gulf countries, when it comes to their local population, their nationals, 50% of most of the Gulf countries' national population is under 30. And I think that's quite an important one. The stats on mobile phone use, etc. We're one of the world's biggest gamers. I think it's 2.2 is the average mobile phone per person in the Gulf at the moment. I would actually believe you'd had 6 phones, I can believe that, quite happily. And just to add to that, my view on where I see that coming along, I showed you some local players on the screen back there. That is going to be, in the next 2-3 years, completely different. We are going to see joint ventures. We're going to see all the normal names that you're familiar with here in Europe turn up onto that board. And I think that the connection between Europe and the Middle East is going to start getting closer and closer in terms of it will start truly looking like an EMEA region. Because I think if we're honest with ourselves at the moment, is kind of Europe as part of EMEA. It's not quite had the joined up thinking. We're getting closer and closer to that as well. So what I'm going to do now is the risky part of the panel, which is I'm going to turn around to the audience and ask them if they want to ask us any questions. And we'll know if we've had a good talk, because they might ask us some questions. So here's the risk. So, audience, are there any questions that we can ask our esteemed panelists? One, fantastic.
With regards, you said, it's always sunny in the Gulf. How does that play out into terms of data center cooling, PUEs, and so on?
So, great question. So, I think there's a couple of things that are happening. Number one is that the Middle East, not long ago, used to run data centers at about 18 degrees, which is nuts when you consider that it's 50 degrees outside during the hot months of the summer. We are starting to see them raising temperatures inside. So the most recent averages are probably 24, 25, just in line with what we're seeing over here as well. We are trying to push people to start thinking about 30 degrees. And I think that's going to have a major impact on PUEs and efficiency, because outside of the hot months, we do actually get some quite good weather. From the cooling perspective and PUE perspective in the region at the moment, today, data centers aren't running very well. That's just because we actually have a few other elements in our environment that really impact us. We have sandstorms, for example. Our buildings get wrecked by that. Riyadh, for example, last year, in the winter, we had temperatures of -1, in the summer, plus 55 degrees. So the infrastructure has to be really tough and expensive to be able to manage all of that. There's more servicing involved in that as well. So, do I see the PUEs dropping? Yes. The market as a whole, every design I'm seeing at the moment, they want to be under 1.4. We are not there necessarily in terms of operations yet, but it is getting there. It's getting closer and closer and closer. I think that liquid cooling, in immersion cooling or cooling on ship, whatever you want to call all those latest cooling technologies that are coming through, will get adopted quite quickly in region, especially when you couple that with AI and higher densities in the data center, along with those cooling challenges. But majority of the year, actually, we can run data centers quite comfortably. But yes, we're famous for a high PUE. 2 is a common number.
I mean, just a quick one on that. Coming from a company that used to run our equipment over the Middle East power lines in the height of summer, which I was never entirely sure how they worked, but seemingly they did, so they was well engineered. I mean, the benefit, I think one thing we don't have a lot of legacy technology baggage. We're building greenfields, so I mean, it's really going to offer an opportunity to bring in the kind of technology that they want for a sustainable, and sustainability, the Middle East and sustainability really know, but there is a big focus on that. We're seeing sustainable data center growth. We've got massive nuclear power development across the Gulf. Probably every data center will have its own little nuclear power plant sitting next to it in the Middle East in 5 years' time, but there's a lot going on there to deal with a lot of these issues.
And just building on that sustainability point, because I always find it quite interesting in the Gulf, most people assume, because it's sunny, surely you have loads and loads and loads of solar coming through. But actually, one of the amusing parts of it is because the grid is able to offer energy so cheap, it has never actually financially stood up for a lot of these energy companies to offer large amounts of solar. So we are now pushing each of these markets to provide renewable generation, explain to them that actually don't worry about the local market taking your more expensive solar to deploy, etc. Because actually you get good corporate PPA agreements, or if you can, direct agreements with data centers who are looking for long-term sustainable energy solutions in the Gulf at the moment for their end users, for their hyperscale users, and they'll pay the premium. But I hope that's answered your question. Wonderful.
What about water usage?
Water usage, yes. Always a tricky one. It's high, right? I think that at the moment we're starting to see more and more technologies try and push us away from having too much water in the data center. Location is really important as well. Hyperscalers, some of the designs that Amazon Web Services deployed a couple of years ago in certain countries use enormous amounts of water. And that was actually a challenge for certain markets to actually deliver that level of water. The reality is that we are fortunate in that we have wealthy markets with incredibly well-funded utility providers. They are monopolies, they're owned by the governments. So it is a challenge in terms of there's a lot of water and it's a cost to it, but actually getting that delivered is doable. I don't know if anyone else in the room wants to add to that, and I've got 1 or 2 people in the Middle East in the room as well. Perfect. Any other questions then on the region? Any other thoughts? Have we called it right? My favourite thing to do at GDCA event, by the way, is to ask people to call me out if they hear it wrong. So have we called anything wrong? Love a heckler. Wonderful. Okay, well I think then we are actually arrived on time, as per Jaz's request. Thank you very much for listening to us. Any other questions for the panel? Myself will be at the back. If I could ask a round of applause for our panel, thank you very much.